All right, great. Welcome to the binary options session. This is our first lesson in the binary, and thank God so far for how he's taking us through all the lessons. So there are a lot or almost everything from the binary and then the main forex, right? A lot of similarities, just few differences. So it's important to take all the lessons seriously because there are a lot of analysis that you'll be doing in the forex class, which you apply them here also so that you can make profit. Okay, so in the binary options, there are three ways so far by which we have identified that you can use to take trades in the market. So we have the technical analysis using the news and the indicators. So I am going to handle the indicators aspect because the technical analysis and the news also, you will be getting all of them from the main forex class. So you just have to apply them here. All right, so let's start. Now, we have identified some rules and guidelines for you to become a successful trader. These are some of the things that we don't know or people don't know, and then they don't do well in forex or in binary. All right, so just as you can see on my screen, we have the golden rules to be a successful trader. Now, the first one here is manage your expectations. Now, how do you manage your expectations? You manage your expectations by building a portfolio for yourself. So example is when you go to the market, you don't go the same day and aspire or aim to make 100% profit that day. As a beginner or even as an expert, it is never done. So manage your expectations. You have a percentage that you are going to make in the market that day. All right, so let's say that you are trading or your capital is $100. Managing your expectations, you can choose to make just 10% that day, which is $10, or 5% that day, which is $5, and then you are good to go. You come back the next day. You don't have $200 as your capital, and then you are expecting to make $400 within 24 hours. It is not a good practice for a beginner or for a trader because you are building portfolio. So you need to know how to manage your expectations. Now, the second one we have is define your trading risk profile. Defining your trading risk profile, definitely you are going to lose some trades because it's not always that your strategy will work. So when you define your trading risk profile, you decide how much you want to risk in the market. If you have $100, you can decide that, no, if I go to the market today and things didn't go well, I should lose only $5 and then I'm out of the market. So you don't go with $100 and lose all the $100 that day or lose $50. No. So you need to know how to define your trading risk profile. All right. The third one is choose trading strategy. Choose trading strategy. There are a lot of strategies that are in binary options. So one that will work for somebody may not be the one that will work for you. So you familiarize yourself with 1, 2, 3, 4 strategies, and then the one that works for you well, you pick it and then you better it. All right. So the next one is control your emotions. Controlling emotions is something that if you are able to conquer it, you will conquer the market, because it works both ways. Whether you are losing or you are winning, it works. Because if you are losing money and you don't define your trading risk profile, or you don't manage your expectations, what happens is that emotions will set in. You'll be tempted to recover what you are losing, and eventually you may lose everything. The same way when you are winning also, sometimes complacency sets in. You will think that you have arrived, or you know what you are doing, or you are a master of the game, and you may try to do something funny, and then you may lose money. So controlling your emotions, you need to be disciplined on what? On managing your expectations and defining your trading risk profile. All right, the fifth one is use stop losses and take profits. So in binary options, we don't do anything like stop losses and take profits. We do that in the main forex, which the facilitator will take you all through. What we do here is entry points and then strike prices and the expiration times. Now, the next one is keep up with the market. Keep up with the market. What is the market telling you to do? What the market is telling you to do is what you should do. If you are trading in a market that is trending upwards, you know you are looking for what? Your buys. If the market is trending downwards, you know you are looking for what? A sells. If you know, or the market is consolidating, that is indecisive whether to go up or to come down, you can choose to what? To ignore the market that day and come back another time. So keep up with the market is between your strategy and the broker, not you and the broker. All right, so the next one is do not overtrade. Do not overtrade means if you plan to make $10 a day, no matter how good the market is, you make your $10, leave the market. Don't be tempted. These things are true. All right, then the next one is you are going to lose eventually. Yes, until when we don't promise you what is not true, or we don't tell you what is not true. We expose the reality of the market to you. We don't tell you to come and make billions within 48 hours. No, we tell you the reality so that you prepare for it. When you prepare for it, that is when you will conquer the market. So eventually, you are going to lose sometimes, but then all the times you are going to win. Because even if you lose, it's a lesson. So you learn from it to better your trades. Now, develop a trading plan. Developing a trading plan, you have to decide with how much you can afford to lose and your capital. Someone who is having $100, their trading plan will be different from someone that is having $1,000. So decide how much you want to make a day, when you want to trade and when not to trade. We have 7 days in a week. You can choose to trade only 5 times. You can choose to trade only 2 times in a week. It all depends on you. You can choose to trade only Tokyo markets. You can choose to trade only New York markets. You can choose to trade only a particular currency. You can choose to do whatever you want with your what? Trading plan. Someone can choose to build a portfolio for 3 months. Someone can choose for 6 months. Someone can choose for a year. So decide it yourself and then choose the right brokers. So we'll be teaching you which ones or how to identify the right brokers. So don't forget these rules. They are very, very, very important. All right, let's go on. So you'll be hearing of binary options. When you talk to somebody about binary option, the person asks you, what is binary option? What can you say? what do you have to tell the person? A lot of people are trading forex without even knowing where forex originates from. But here we expose you to the basics until you get all that you need to know. So what is binary option? It's not any big word that you should be worried about. Binary is just like comparing two things or two things moving together. And options used as a verb is just like to buy or to sell. Yeah, you have an option to go for yes or no. Very, very simple. This is the reality of, this is the meaning of binary options. All right, so just as you can see on my screen, binary options trading simply has to do with an asset performance, either for a short term or long term, not by gambling, but by technical analysis, whether the price of an asset will go up or down within a specific period of time. It can simply be described as the yes and no form of trading. So two things, you are comparing two things. You decide whether this one will go up or will come down. You don't just gamble. So this is just the meaning of what binary options is. We have orange and we have what? We have apple. So you decide whether the prices of orange will go up so that I go for a buy, or the prices of what? Apple will come down so that you go for a sell. Very, very simple. Now let's move on to the next one. Now, what kind of assets are traded on the market? On the binary broker, what kind of assets are traded on the market? So we have the assets here. The first one is the currencies. And the currencies example is the USD, which is the United States dollar, the JPY, which is the Japanese yen, GBP, which is the Great British Pounds, JPY, Euro USD, NZD, CHF. So these are currencies of countries, which we always trade them what? In pairs. So you'll be exposed to all this in our next session. Now, another one is the stocks. Stocks, these are big companies in the States. So they are also on your broker that you'll be trading them. Example, we have the Lukoil, McDonald's, Apple, Home Depot, IBM, several of them that you'll be exposed to. And then we have commodities. So you can see example, the gold, silver, and then crude oil. Now, we have cryptocurrencies. We have Bitcoin, Ethereum, and then what have you. All right, so let's move on to the next one. Now, important things to know in binary trading. Now, in binary trading, these are the 4 important things that you are supposed to know. When you go to the main Forex site, you have a lot of things like calculating peaks, where to set stop losses, where to take first profit, second profit, and all those ones. But in binary, it's quite simple. And these are the 4 things that you're supposed to know. What kind of assets are you trading? I spoke earlier on in our previous slide about the assets that are traded on what? On your broker. So what kind of assets are you trading? Are you going to trade for currencies, stocks, commodities, or cryptocurrencies? You need to decide. Now, what is your strike price? Strike prices are always the entry points. They are always the entry points. They are figures. That's when you click on them, you decide whether if you go for a buy, your price should be above that striking price or that entry point. That is what we call it, the strike prices. All right. Now, what time frame are you trading on? We have time frames on the broker. You can choose to trade on the 1 hour time frame, can choose to trade on what 1 day time frame, 4 hours time frame, and what have you, depending on the strategy that you are going to use. And then what is your expiration time? Your expiration time, we're talking about how long do you want your trade to last? 1 minute, 2 minutes for your trade to expire, 5 minutes, you decide depending on what the strategy that you are going to use. All right, let's move on. Now, different kind of binary option brokers. Now, in 2021, Pocket Option has been rated as the best binary options broker. It is on the internet, you can find out. So these are some of the brokers that we have on the binary options. We have Pocket Option, we have Binary Cent, we have IQ Cent, we have Raise Option, we have Video Forest, and then we have Cotest. These people are quite new, the Cotest. So there are thousands of them, but these are few that we want to what? Show you. All right. Now, how do you choose your binary broker? These are the few things that you need to see or identify before you choose a broker, the one that you are going to use for you to be successful in the market. All right. Check if the broker is regulated. So you need to read about them. You need to find out if the broker is what? Regulated. Previously in the Forex class, you are all made to know that you are going to use a broker called Exness. Don't just go and then start creating accounts on Exness. Yes, that is what the facilitator has recommended. But then you also learned in the binary class that you should what? You should check if brokers are what? Regulated. So read about them and check if it's regulated for you to choose. Now, ensure that you read the terms and conditions of the broker. A lot of people don't like reading terms and conditions. We only go and then accept without knowing what we are accepting. So read the terms and conditions of the broker before you choose them. So that when you start trading with $10 and you make about $50, when you want to withdraw, before you got to realize that the minimum withdrawal is 120. Meanwhile, it is stated in the terms and conditions. You don't know. This is just an example that I've given. All right. Consider the broker's experience. Consider the broker's experience. What are people saying about it? Is it good or is bad? Is it lagging or is it working very, very well? What is their payout? Do they pay very well? You need to check all those things. Ensure the broker offers trading tools. There are a lot of tools, including the indicators, and then a very visible platform. Check if all these tools are okay, or check if the broker has all these tools before you choose it. Ensure the broker has a demo account. Every strategy, you need to practice it. Every strategy that we'll be teaching you, you need to practice it. So ensure that they have what? A practicing account, and then practice, so you are confident before you go live. Don't start live trading just afterwards teaching. All right, so the last one is check deposit and withdrawal. Now check deposit and withdrawal. Checking the deposit, you got to realize that the payment gateway that the broker is accepting, do you have that in your country? Maybe they are having a payment gateway that is only accepted in another countries. So if you choose that broker, check if you can deposit successfully, and check the withdrawal also. Whether if you withdraw, how long does it take? Does it take 1 week? How much do they charge during withdrawal? Is withdrawal free? Pocket Option, I had few experiences on it. I was charged only once. All my subsequent withdrawals, they didn't charge me again, and a lot. So you check the deposit and then the withdrawal. But it all boils down to what? Reading about the broker. All right, let's move on. Now, how do you take trades on the broker? So this is what we have, the hidden mechanism in taking trade on the broker, when to buy and then when to sell. So now this is the mechanism. You are able to identify on the broker that at a particular entry point, I made mention of entry point, which is a strike price in our previous slide, that at a particular entry point, the sellers are done selling in the market. Therefore, the buyers will take over. That is when you go in for a buy. Now, when to sell, it's just directly opposite of what when to buy. You are able to identify on the broker that at a particular entry point, the buyers are done buying in the market. Therefore, the sellers will take over. That is when you go in for a sell. Because in binary options or in trading, we do only two things: we buy or we sell. So if you are not buying, you need to be selling. If you are not selling, you need to be what? Buying. All right. So the next one is the big question. So if they are telling you to buy and sell, you definitely ask, when do I know that this is the time to buy, and when do I know that this is the time to sell? So we have here, when do you know that buyers or sellers are done for you to take a trade? When will you know for you to take a trade? This one we are going into theory practical. All right, so let's go on. Now, just as I mentioned earlier, I will be taking you through the indicator strategy. Because the technical analysis on either TradingView and others, you will need them and then you come and apply them over here, which the Forex facilitator is going to take you through all of those things. So now the indicator strategy. Now, the indicators are available tools on the trading platform that are used to what? Analyze the market movement. Very, very simple. Indicator is just an English word. Just like the traffic. So they call it a traffic indicator. When it is red, you know that you have to stop. When it is green, you know that you have to go. Very, very simple. It's not any big word that you should be afraid of. So indicators are available tools on the trading platforms that are used to analyze the market movement. Use the indicators to analyze whether the market is going upwards for you to take a buy, or is coming downwards for you to take a sell. Now, these indicators seek to locate or identify market trends and patterns which a trader can use to inform their trading decisions in the market. Yes, so you use the indicators to know whether you want to buy or you want to what? Sell. Okay, let's go on. I think this is the final slide. So these are some of the indicators that we will be using in the binary options class. So the top 10 indicators, first one, we have the Bollinger Bands, we have the MACD, we have the parabolic SAS, we have the relative strength index, which most people call the RSI. We have the Fibonacci retracement, We have the stochastic oscillator, the moving average, exponential moving average, the alligator, and then the Oxum oscillator. So these are the top 10 indicators that we'll be using very, very well in the binary options. Now, take note, some of these indicators that we are going to learn over here, you will be needing them also in the technical analysis class on the Forex section. So you got to realize that both sessions are have something to do with each other. You learn something here, you practice it over here, or you apply it over here. You learn something there, you apply it here also. So there is no way you are not going to what? Get the strategies that we will be teaching, because it looks like they teach you here, you get it there. They teach you there, you get it over here. All right. So I think this is the last slide. And then what happens is that what we are going to do now is we are going to take all these what indicators, and then we are going to learn about them one after the other. One after the other. What's happening? So we can see the indicators here, and then I've sent it already into the group. So let's read about them before our next class, which we are going to know what is the meaning of Bollinger Bands, where it comes from, when do you need to see it before you take a trade, how do you apply it with other indicators, because you can't use only one indicator. One indicator means something, the other one also means another thing. So when they come together, what does it mean? So that is when you are going to what? Take informed decisions. All right. So in the absence of no question, what we are going to do is we are going to bring the section to an end. And what I want you guys to do is to read about the indicators. And then in our next section, everything will go on smoothly for us. All right. Thank you very much.